Okay, here a new update of Bitcoin and crypto markets, especially Bitcoin, that we thoroughly assessing the market bearish trend. So we are considering the trend and significant price levels, particularly at all-time high at around 108,975, let's say 109,000, and the current price. And this helps us maybe to understand the key resistance tested multiple times and the recent breakout. Important is that you need to know and to look again on the daily chart that the very important 91,500. Why this level is very important? Because it has been tested since November of the last year 5 times, or better said 4 times, and now for the 5th time today this very important level broke. And this is very important because it represented a very important bullish support, but not this time. Finally the bears took control, or better said total control of the market, and therefore we are considering a downtrend. Also, you see here that the bars are in 2 colors, in green and red. These are not typical candlesticks, what you may know. The color represents the volume down of the volume profile, not the daily but the monthly, meaning that the market has already arrived below the value area of the monthly volume profile that has or is more significant, more important than the daily volume profiles. So the typical candle bar are representing if the price, the open price, is above the closing price, then the candle color turns to red, to green, and vice versa. Therefore, it is not representative for our analysis. With other words, it's senseless or nonsense. But in this case, we use the volume profile, that are the fingerprint or the footprint of the big powerful guys in the markets with billions, even trillions of dollars. They drive a trend up or trend down, and red color says they turn the trend down. Okay, now let's analyze the price dynamics. I have been evaluating the downtrend, all-time high, and the current price, emphasizing the significant resistance level, again 91,500, that has been tested multiple times. This analysis highlights potential market behavior during fluctuations, and we have seen that since testing the all-time highs, the market wasn't able anymore to make higher highs. Instead, we made higher highs and lower lows at the same time. So a lot of broadening patterns have been created, and especially at those very important key levels, if broadening patterns create or initiate, they represent a trend shifting, and that has happened now after 2 weeks. Interesting is seeing a major resistance level break after multiple tests. That signals a significant market shift, again below 91,500, and this could spur a new trend that has been now firm. We had a stop hand below 89,000. The market went up for a short time to around 89,300 and now turning back. And that means that now the bullish stops are hunted levels after levels down, meaning the next target is, for example, the next support line, and this support line will be at around 86,700. Then the market hits that level, gets up a little bit, and targets the next one, which is 85,945, getting up again, and then targets the next level, 81,145, and so on. Therefore, in this analysis, I'm not talking anymore about the bullish targets because we are in a serious phase of the market, and this is now the entering from the weak part into the strong phase of the bearish trend. The weak phase of the trend has been in the near of 91,500, where we had also many false signals. For example, for the bulls, each time they started to buy the market fell very quickly and very powerfully down. And also the bears had at the beginning some troubles. They started to sell the market went up very quickly before it fell. Some took out the profit, maybe some losses, and I hope they put some stops. But the more time passed, the more or the better results the bears or the bearish, the sellers in the market has gotten and or gained better profits, larger profits than the bulls. So at this time now, when the sellers put any positions, the market runs maybe for a very short time against them, but falls deeper in their favorite direction. Who will lose in this phase of the market? The buyers, especially those on day traders, which target to buy the deeps, and that's a very big mistake, especially in this phase of the bearish trend. Why? Because the momentum, the bearish momentum, is very strong. It's the same as you jump in front of a rolling train with 200 miles per hour. You can imagine who wins at the end. So don't make that mistake. And again, I understand that a lot of influencers, Bitcoin influencers, are trying to talk positively about Bitcoin because they like Bitcoin, nothing about it, but also maybe a warning sign to all of them. In this phase of the market, you must be realistic. In this phase of the market, this is the part of the market where the technical analysis and the fundamental analysis align together. The fundamentals for stocks, for the economy, global economies, for crypto is bearish. Don't believe all the reports they spread. The US government building crypto reserves and so on. This is the story, what may happen in some months from now on, or maybe 1 or 2 years. I'm not ignoring them, but important is what you are doing now. And now the market is going down first. And if you would now pass, yes, but in 2 years the market goes up, what will you do if you lose money now, all your money you have here? In 2 years, nobody knows what will happen. Maybe the earth is not existing anymore because we will have a lot of nuke bombs, right? And nobody knows what will happen. Maybe Trump will not be there anymore. Who knows? I hope he will celebrate also his 100th birthday or even 150th birthday. Have a long time life. God bless him. But this is the market, and the current state of the market is definitely 100% bearish. The fundamentals too. We have a lot of uncertainty in global economies and also in tech markets that passes or are chained also to crypto markets. And we have a lot of tariff policies, so it's not over, right? So I said also in my last video, also published today, please watch it, because there I mentioned again the Bitcoin level especially, but also in other videos I mentioned that this year, this month, especially the February, March, are very, very choppy, volatile markets, extremely dangerous. So you should be very aware of doing it. So now evaluating market opportunities tells us that we can note a key resistance level tested multiple times. This is number one. And what will happen next? Based now on this input, I break it down to analyze from a technical perspective to assess the short-term positions or short-term to mid-term trend. The current market setup, again, all-time high 109,000. Current price is at around 89,270. We see that the price is moving between this level and below 89. Then we have a gap support at 78,000 to 80,000. This is the next support below the gap. And we have a next major support at around 74,400, followed by 57,740K. So since we are in a downtrend, breaking the key support at 91,500, moving lower signals, weakness in the market, and the break below 87,250 further confirms that bears are in control and that the price is testing lower supports. The current price still, we see here, moves high and low, but the tendency is going to that level. Important current support zone to watch is now 78,000 to 80,000, which is the gap support, because gaps in price often act as support or resistance and also a price magnet. Meaning if you are, for example, we have a gap, a bullish gap, the market passed up, then the participants, the market traders wait to come back to this price when a bearish momentum has been established, and this is the case. Now, depending on whether the price is moving up or down, since you are short, keep an eye on 78 to 80,000 region, as it might act as a strong resistance if the price retraces. If the price is able to climb back towards this gap and fails to break through, that could be a good opportunity to add maybe some short positions. This video is, of course, my personal opinion, but no way, no advice. And you need to know that trading includes also a big risk, maybe total loss or risking all your money. So be careful always, okay? Then 74,400. This price, and this is another key level to monitor. If the price fails to hold the gap support and moves toward 74,400, it could indicate further downside, meaning if the market tries to get higher than this price but falls down very quickly, it is, for example, a significant sign that the market wants to go lower. And this might be your final target if the downtrend continues. Now, if we also study some price action considerations, a break below support, for example, the fact that the price breaking below 87,250 and now trading a little bit higher and lower is very important. Why? Because if the market doesn't quickly recover above this level, it suggests a continuation of the downtrend. It suggests that the downtrend wants to go deeper. The lack of follow-through after breaking support can indicate an exhaustion in the move and a potential for retracement, for example. And the multiple tests of 91,500, these repeated tests of this level are also significant. Why? Because if price couldn't hold above this level multiple times, it indicates a rejection of resistance. Now the bears immediately take action and to wipe out any bulls who try to get up, which of course strengthens or makes this bearish outlook more stronger. So a failed attempt to break above this level, that means a return below it, gives more confirmation for your shorts. You need to keep also to pay attention on oversold and overbought levels, and you need also to watch for a failure or gap support. If it gets respected, if it gets rejected, for example, and once it gets respected, the next support is 57,740. If the price breaks below 74,400, then the next target will be 57,740. This is then the next target. So we expect also potentials for a retracement. That means being aware that the price might temporarily bounce back to the gap area, 78 to 80,000. But as long as the downtrend remains, it interacts and price fails to hold above these levels, the bearish outlook should remain its validation. Final thoughts, maybe they can help. Pay attention to risk management. Ensure that you have your stop loss above the resistance levels, particularly at around 91,405, or the gap support above 80,000. If the gap, you can find it at around 78,000 to 80,000. And this will, of course, help to protect against a potential short squeeze if the market turns. Targeting support levels is also very important, that your first target should be at around 74,400. The next one, 57,740. The next one, 49,280. And once that very ultimate support breaks, the next target is at 21,980. Reaching there is of course possible. Why not? We have been already there 2 years ago. And once the market is there, possibly it can go below 15,000, even to below 8,000K this time. Imagine the United States wants to have Bitcoin very cheap, because if the price is very cheap, they can buy more to build more crypto reserve currency. They all are very intelligent, smart businessmen. So if now somebody tells you, yeah, but Trump wants to buy cryptocurrencies, of course, I agree with you and I agree with them, but not at this price, not for 100,000. They want to have it very cheap. Imagine if you could have something for $8,000, why would you pay for that 100K? So any other argument is far away from any kind of logic, and therefore I personally stay with my technical analysis. I don't know how you decide, but I wish you having a very great, successful trading day.